Welcome back to the Malaysian Money Matters Show. It's July 15th, 2025, and we're diving deep into today's key market and economic news.
That's right. We've got quite a mix today. Malaysian corporate moves, some important policy updates, and of course, the international picture affecting us all.
Okay, let's jump right into the Malaysian company news. First up, Maybank. They've extended a pretty significant loan, RM 638 million, to AT&S Malaysia.
Yes, and it's a sustainability-linked loan, which is quite notable. It's actually the first time a local bank has done this for a multinational in the semiconductor space here, tied to emission targets too.
So impact-wise, this really cements Malaysia's position in that global semiconductor chain
Yeah.
and boosts Maybank's green credentials.
Exactly. And speaking of green finance, CIMB Group has massively increased its sustainable finance target.
Oh yeah, how much?
They've tripled it, up to RM 300 billion by 2030. It's a really substantial commitment to ESG principles, helping clients transition.
Wow, okay. And keeping with finance, AEON Credit issued Sukuk Wakalah again.
Their 10th issuance, RM 150 million this time, mainly for their Shariah-compliant consumer financing business, just continued funding for their lending.
Got it. Now, shifting gears slightly, Capital A and Kereta Tanah Melayu, the railway company, they've signed a MOU.
Yeah, this one's interesting. They're looking at integrating travel services. Think bundled flight train tickets, linking up cargo, maybe even loyalty programs.
So trying to make travel and logistics smoother across different modes.
Precisely. Modernizing the whole landscape, hopefully making it easier for everyone, consumers and businesses alike.
And sticking with infrastructure, Econ Pile Holdings seems to be off to a flying start for their fiscal year.
Definitely. They've already secured RM 125 million in new contracts in just the first 2 weeks. Analysts think they might even beat their full-year target at this rate.
That sounds like a very positive sign for the construction sector then.
It does. A good indicator, yeah.
Okay, let's talk airports. Malaysia Airports put RM 30 million into upgrades at KLIA Terminal 1 in the first half of the year.
Yes, focusing on passenger comfort, speeding up processing. They're aiming to climb up those international airport rankings. Better experience, better global standing.
Makes sense.
Mm-hmm.
We're also seeing some diversification. Flexa Dynamic Holdings is moving into gamma sterilization.
They're acquiring a majority stake in a company called Gammatech. It's a strategic move, really, given the challenging times for the glove sector, which is their core business.
Right, reducing reliance, moving into maybe a higher growth area.
Potentially, yes. And another diversification. Radium Development is breaking ground on a hospital in Malacca.
A property developer moving into healthcare.
Exactly. Radium Hospital at Air Caro. It's about tapping into healthcare needs, especially in Tier 2 cities and maybe even medical tourism down the line.
Interesting pivot. Okay, one last corporate point. Rex industry shareholders are being advised to reject a takeover offer.
That's right. An independent advisor called the offer not fair and not reasonable. Basically, they think it undervalues the company, highlights potential issues for minority shareholders.
Okay, let's shift to the broader Malaysian economy and policy. Consumer spending looks like it'll hold up in the second half.
Analysts seem to think so, yeah. Helped by the recent OPR cut, making borrowing cheaper, plus wage gains, more tourists coming in. But there are risks.
Like what?
Well, things like the expanded SST, the sales and service tax, and the fuel subsidy changes, those could squeeze households a bit.
Right.
Yeah.
And on the flip side, CIMB Securities is flagging potential issues for oil and gas firms.
Yeah, they see earnings possibly shrinking further this year, persistent headwinds in the sector, even if the valuations look kind of low on paper.
Okay, now a couple of policy moves. The National Seed Council is launching soon.
Yes, this is focused on food security, regulating the seed industry, trying to prevent monopolies, and setting up a national seed bank. Crucial for reducing reliance on imports.
And also, Malaysia is putting immediate controls on exports of high-performance U.S. AI chips.
It's a strategic trade permit requirement, basically closing regulatory loopholes while they review adding these chips formally to the Strategic Trade Act, tightening control over sensitive tech.
Makes sense. And finally, on the domestic front, big investment in energy for Sabah and Labuan.
Over RM 260 million for 7 projects, aiming for better electricity supply, including, importantly, a new transmission line to import power from Sarawak that connects into the bigger ECM power grid plan.
Okay, significant infrastructure push there. Let's zoom out now to the international scene. What's happening globally?
Well, first, China. Their rare earth exports jumped quite a bit in June, up 32%.
Could that be a sign of easing trade tensions with the U.S., maybe from those talks last month?
It certainly suggests that could mean some relief for industries needing those critical metals. Also, China's Q2 growth looks like it just edged over the annual target.
Though maybe less pressure for more stimulus for now.
Possibly. Strong exports helped, plus that U.S. trade truce. But, the truce expiring is still a question mark.
Right. And Singapore's economy did better than expected in Q2.
Yeah, it expanded faster than forecast, avoided a technical recession. Looks like strong manufacturing and services, maybe some front-running of those higher U.S. tariffs, plus a construction boost.
Resilience there, but worries remain about those tariffs kicking in from August 1st.
Definitely. And speaking of global factors, OPEC is projecting very strong oil demand for this current quarter, Q3.
Suggests a tight market ahead.
That's what they're forecasting, likely influencing prices and production decisions globally.
Okay, let's talk trade tensions again. The EU isn't happy about Donald Trump's proposed 30% tariff on their goods.
No, they called it effectively prohibitive, warning it could warrant retaliation. It really ramps up the risk of a wider trade conflict between major blocs. Very disruptive, potentially.
Wow. Amidst all this, an interesting trend. Investors worried about deficits in developed markets are turning to emerging market bonds, including Malaysia.
It's quite a shift. They're seeing these EM bonds, especially in Asia, as a sort of haven right now. Strong demand, falling yields, it signals maybe more confidence in the fiscal prudence of these emerging markets.
Fascinating. And what about the U.S. dollar? It's taking quite a tumble this year.
Over 8% down. HSBC strategists are actually calling the selling an anti-bubble, suggesting maybe the bottom isn't far off. Potential stabilization ahead, perhaps?
Interesting term, anti-bubble. Meanwhile, China's central bank, the PBOC, what are they up to?
They're sort of nudging smaller banks to invest more in government bonds, but carefully. Encouraging investment within reasonable limits, still warning about too much risk, balancing stability, and supporting government borrowing.
And one last potentially major risk flagged by a Deutsche Bank strategist, the possibility of President Trump dismissing Fed Chair Jerome Powell.
Yeah, they see that as a significant, maybe underpriced risk. Could trigger a big sell-off in the dollar and treasuries if it happened. Raises serious questions about central bank independence and market stability.
Definitely a lot of moving parts there. What an overview. From specific company moves here in Malaysia, right up to these huge global trade and finance shifts.
It really shows how interconnected everything is, doesn't it? And, thinking about all the trade tensions, the focus on AI and critical tech, it brings up a question.
Oh, yeah?
Well, considering how Malaysia's responding with targeted policies like the AI chip export controls we mentioned, and focusing on developing local resources, how might that specifically position the country in this changing global landscape amidst these shifts in economic power and tech demand?
That's a really provocative thought. How Malaysia navigates these complex currents.
Yeah.
Definitely something to keep watching.
Indeed.
Well, that's all we have time for on this deep dive. Thanks for tuning in. We hope you'll continue your learning journey with us. And please do subscribe to the Malaysia Money Matters podcast wherever you listen. Hey there. Thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.